Every country in the world is in debt. Not just poor countries, not just developing nations. The richest nations on earth, the most powerful governments, they are all borrowers. And this raises a dangerous question. If everyone is in debt, who is the lender? This is the global debt trap, and once you see it, you'll realize it was never designed to be escaped. Debt was once meant to be temporary. Borrow in crisis, repay in growth. That system no longer exists. Today, governments don't borrow to survive emergencies. They borrow to function. Budgets depend on debt. Social programs depend on debt. Even interest payments are paid with more debt. This is not an accident. It is a structural shift in how the global financial system works. Decades ago, debt levels like today's would have triggered panic. Now, they are considered normal. Why? Because modern governments discovered something powerful. As long as growth appears to exist, debt can be rolled forward indefinitely. Old debt is never repaid. It is refinanced, extended, hidden behind new bonds and new promises. The system survives, not by paying debts, but by delaying them. When a government borrows, it doesn't borrow from the market in the abstract. It borrows from banks, pension funds, insurance companies, central banks. In other words, your savings, your retirement, your future income. Debt is not held by outsiders. It is held by the system itself. This creates a dangerous loop. If debt collapses, everything collapses. Here's the part most people never hear. It is mathematically impossible for all debt to be repaid. Why? Because debt is created with interest, but the interest is not created at the same time. To pay interest, new debt must be created, which creates more interest, which requires more debt. This is not a conspiracy. It is how modern money works. The system requires expansion, or it breaks. Governments are not the only ones trapped. Households are trapped. Students are trapped. Middle-class families are trapped. Wages stagnate. Living costs rise. Debt fills the gap. Credit cards, mortgages, student loans. Debt is no longer a choice. It is a requirement for participation in modern life. When crises happen, debt is not erased equally. Large institutions are protected. Banks are rescued. Governments are stabilized. Ordinary people are told to be responsible. Losses are socialized upward. Costs are pushed downward. This is why debt survives every crisis, and people don't. No announcement was ever made. No vote was ever held. The world simply transitioned from a production-based economy to a debt-based one. And once debt becomes the foundation, everything must support it, including inflation, including currency debasement, including financial repression. Now you understand the first truth of the global debt trap. Debt is no longer a problem to be solved. It is the system itself. Now we go deeper. Who controls this debt? Why inflation is used to manage it? And what happens when the system can no longer expand? Debt gives power, but not to governments alone. The real control lies with central banks, large financial institutions, and global capital markets. Governments issue debt, but they depend on buyers. If confidence disappears, borrowing costs explode, budgets collapse, currencies weaken. This is why governments prioritize markets over citizens, because debt markets decide who survives. Debt is rarely reduced directly. It is reduced indirectly, through inflation. Inflation lowers the real value of debt. What was borrowed yesterday is repaid with weaker money tomorrow. This is why inflation is tolerated, even encouraged. It is not a failure of policy. It is a tool. To make debt manageable, the system uses financial repression. Interest rates are kept artificially low. Savings earn less than inflation. Capital is pushed into riskier assets. Savers lose quietly. Debtors benefit silently. This is how massive debt loads are sustained without triggering collapse. A true default would reset the system, but it would also destroy it. Banks would fail. Pensions would collapse. Savings would vanish. So instead of default, the system chooses delay, rollovers, monetization, inflation. Collapse is postponed. At the cost of purchasing power, growth today often isn't real growth. It's debt-fueled expansion, borrowed demand, pulled forward consumption. GDP rises. Markets celebrate. But beneath the surface, productivity stagnates. Living standards strain. The system grows. But people don't. There is a limit when debt grows faster than income, when interest consumes budgets, when confidence fades. The system faces a choice: austerity or inflation. History shows which one is chosen. When adjustments happen, they are never equal. Large institutions exit early. Capital moves first. Information flows upward. Ordinary people react last, after prices rise, after savings fall, after choices disappear. This is not accidental. It is structural. Now you see the full picture. The global debt trap is not a crisis waiting to happen. It is a system designed to continue. Debt is rolled forward. Inflation manages the burden, and purchasing power pays the price. Understanding this doesn't mean panic. It means clarity, because once you see the system clearly, you stop blaming yourself and start understanding the rules you're living under. This concludes our deep dive into the global debt trap. The system may be permanent, but ignorance doesn't have to be.